Now on to more business news. Laikipia County plans to float an infrastructure bond seeking to raise 1.4 billion shillings from the local market. Laikipia Governor Ndiriitu Muriithi says the county has finished its regulatory filings with plans to float the bond in April this year.
Last year, the National Assembly amended the Public Finance Management Act, giving counties power to access local debt market to raise funds. The proposal was met with concerns that counties might default their loans, forcing the national government to bail them out, further increasing the national debt. However, Council of Governors Finance Committee now says most counties are credit-worthy and deserve to raise the additional funds to supplement their revenue.
Counties are economic entities that in fact can borrow, just like the country itself can borrow. Obviously, the borrowing should be focused and it should be for the right purpose. And if you read the Constitution of Kenya, it envisions that counties can borrow.
Laikipia County plans to become the first county in the country to raid the debt market to raise cash. Laikipia Governor Ndiriitu Muriithi says the county will issue bonds worth 1.4 billion shillings in April this year with a 10-year maturity.
So the law has always been there. What is happening now is that counties are coming of age, meaning we have a track record. We have 7-8 years of financial history that are audited, that you can then assess to see the creditworthiness of a county.
However, counties seeking to raise money from the capital markets are being encouraged to enhance accountability to boost investors' confidence.
The biggest challenge has been corruption. As we have devolved these funds, we have also devolved corruption. The other challenge has been the ballooning wage bill, and we have the experts here who will talk about that, with very little going towards development and more going towards recurrent expenditure. And this has actually affected the objects of devolution under Article 174. We also have had a challenge of dwindling on-source revenue from the counties. Counties over-relying on the exchequer and not doing much to grow their own source revenue.
The funds will go towards expanding water services and sewerage infrastructure.